All right. Good morning, everybody. It's Monday and we get to start it all over again. As we mentioned last week, TradingView is doing their Black Friday sales event. It was 70% off, and that was like pro version for $200 until 2025. Pretty fantastic. So I got the spot gamma levels here on the screen. This is for the SPX and the ES. Just capture it with a screenshot, and then you can draw it out on your charts later. I already posted it in the chat, but if you want the combos and all the ancillary levels, I didn't post those. Same thing for the SPY. NVIDIA, NASDAQ, might as well be NVIDIA. Maybe that was a Freudian slip. And the Qs. What about Microsoft this morning, huh? How's that for a fantastic move? Now remember, they already had a 50% stake in that AI company, but then dude leaves the AI company and comes to work for Microsoft, and so does all his proteges or colleagues, or pick your word, for Microsoft's AI program. So they win in the end, right? Microsoft wanted to absorb them from the beginning and they didn't want to do it, so they sold, a stake of the company. And so if Microsoft can't buy the company, they just buy the talent. Just because you're paranoid doesn't mean somebody ain't out to get you. Hong Kong is up 2% today. I was digging through the news on this, trying to find what exactly was going on to give it such a boost. And other than some like shadow stimulus, I didn't really see anything all that exuberant. But it doesn't take much right now. Most of the other markets are flat, except for the Russell being down 0.5%, Japan down 0.5%. Really, a lot of the other markets just haven't really got much of a push yet. U.S. leading economic indicators this morning at 10 o'clock, and then we're going to have a Fed speaker, Tom Barkin, on at noon. And these events, a lot of times they're just puppet shows, right? They're just coming out singing from the same hymn book. They're not going to radically deviate from their peers. And unless the media mistakes what they say, and that has happened before, and or they just speak out of turn and inadvertently say something that they didn't mean to say, didn't want to say, wasn't supposed to say, a lot of times this isn't going to be impactful. But you can't take that on face value. We still need to be prepared for them to put their foot in their mouth. So as usual, the mantra is watch the clock. Watch the clock. Got the Dixie below 104. And this is a really big deal. But we got yields up this morning, and we got, the futures trying to rise this morning, and dogs and cats are playing poker together, and it's just madness. We do have additional auctions today at 11:30 and 1 o'clock. It's the 20-year. This is a really big deal. You're not supposed to have favorites when you talk about your children, right? Or, you got more than one dog. You love them both. You're not supposed to have favorites, but the 20-year holds a little something near and dear to me. This is an important one. You definitely want to be on your toes at 1 o'clock today. I know it says 2, but this thing every once in a while decides to reset itself. So then we got to go back in and put it back where it belongs. There we go. 1 o'clock, 11:30. We're going to have Bank of England. That's pretty late at night, right? For them. If you think about it, right now, it's 12:30 in London. So we're going to want to continue to see that dollar fall. It's a big deal. Not like a brick in water. We don't want to see it move too fast, but we do want to see it maintain these lower standards. So nothing should move in a straight line. We will expect some minor bounces along the way, a rally into resistance before rolling over and continuing that move lower. People much, much smarter than me called the top in the dollar a couple of weeks ago, and so far that top is holding true. So, you know, if that is going to stick, then the idea is that we've topped out in the Dixie, and it's just going to hopefully slowly work its way down from here. Let's get it back below that $100 level. The main takeaway right now is that we're below the 104, and as long as we're below 106, the market can rally. Now, look, this isn't like putting our foot on the gas pedal. Just because the Dixie's below 104 doesn't mean we're going to run out and go long in the S&P and expect it to go up. It's not driving us higher. But with the Dixie below that 105.5, 106 level, the markets can move higher, and we won't be able to point to the Dixie and say, oh, well, we're not going up because of the Dixie. As long as we're below that 105.5, call it 106, then if we don't rise in the S&P, it won't be because of the dollar. It'll be because of something else. Think about the connection to everything else, right? US dollar, Japan, Europe, US dollar, British pound, US dollar, China, all these pairs that we talk about from time to time. This falling dollar will have ramifications all around the world. Notice the 20-year is not showing here on Thinkorswim. This is why we check multiple sources in the morning. There are so many economic events that come out every single day. Even all of the places that we've looked at this morning didn't cover them all. There's an absolute ton. If you want to learn more about the ones we didn't cover, Thinkorswim does not give you economic events. They come to Econo Day and they get what these guys are offering and they put it into the Thinkorswim for you. So everything announcement wise for economic events that Thinkorswim presents comes from here. Now, I'm not logged in. I don't have an account here. Well, I have an account, but it's not a paid account. This Econo Day is a pretty amazing place. And if you get to digging around in here, you will find that there are economic data points for the most minor of things that we never hear about in the news, but can be impactful. They're just not the sexy, glamorous, shiny things like CPI, non-farm payrolls, and so they just don't get the coverage perhaps that they deserve. But we know the government, in its laziness and routine, puts posts out at 30 minutes and 15 minutes and 1 hour time frames. So when I say watch the clock, watch the clock. Look at the volume flows that come in on a 15-minute candle, a new 15-minute candle, or a new 30-minute candle. Look how often price changes completely right at a new hour, going from a bearish market to a bullish market, like Friday, like every day. So watch the clock. We don't have an MDP today. We've already hit it, crossed through it multiple times. We started out with a really narrow IB, that'd be initial balance. And it stayed narrow until 2 o'clock when we got into the kill zone. And at the kill zone, we made our biggest move. And now we are basically resetting that move. Even in that big move, we failed to break above yesterday's RTH, and we never got close to yesterday's highest point. We're still range bound. A good rule of thumb is if we are sitting inside of yesterday's price, it's probably going to be difficult to trade. If you want to narrow that up a little bit, if we're sitting inside of our own price action from the Globex, it's probably going to be difficult to trade. So if you find that you're losing more often than you win, quit doing the hard stuff. Do the easy stuff. Grow the account out. Build your skill base. Focus on doing the harder stuff after you're already profitable. You can add to that rule of thumb if we're still inside of yesterday's price action, not just the RTH, but all of it, then it's very likely going to be a difficult time period to trade. Now, this isn't always true, especially if the previous day was one of those big, expansive days with lots of room, 100, 150 points, because then, of course, there's plenty of room. So you can imagine on Wednesday or Tuesday of last week, that created a very large day. And if we traded inside of that very large day for the rest of the week, there would still be plenty of opportunities to trade. So that rule of thumb about being inside of the previous day's price action isn't perfect. But if you think about Wednesday and Thursday of last week, for an example, just look at that trash. I've had people say, well, I didn't know it was going to be a sideways, choppy, nasty day until I got my account blown in half and I spent all morning getting chewed up. I get it, but you can just look left. When you start the day, are we looking at price sitting inside of its own Globex range? Yes. Are we still inside of the RTH from yesterday? Yep. Are we still inside of the entire day of yesterday? Yep. Probably going to be a choppy, difficult, nasty day to trade. So I'm not saying you shouldn't trade it, just that if you are already not profitable, quit doing the hard stuff. You'll find that it's easier to be profitable when you're not doing the hard stuff. We're still above the vol trigger. We're still above 0 gamma. We are a long ways away from the put wall. So we are bullish. We didn't get the movement out of the weekly pivot point that I would have liked. It moved up some, but not as much as I would have cared to see. Last week, it was down here at 4,400. It's now at 4,490, so it's closer. Certainly, we gained 90 points on it, but we're opening this week already a considerable distance from that weekly pivot point. So kind of looking for a little bit of a reset, a nice little pullback into that zone. But to do that, we would need to interact with that volatility trigger. So any move to the downside today, pivot by pivot. First, we focus on our own Globex low. We get through that. We can focus on the low of Friday. Through that, we get to the volatility trigger. And then through that, we get to the roundy, which also happens to be the ADR half at 4,500, level by level by level. And we have no reason at this point to believe that we won't make that trip. but I don't think it's going to be a straight shot, right? That wouldn't be the base case scenario. We don't have enough negativity for that to be a straight shot. So very likely we fall into the pivot, say our own Globex low, bounce there, rally up into the daily, break support, drop to the next level, bounce that, maybe rally up into our own Globex low, break, you get the idea. Bounce and fade, bounce and fade, bounce and fade, all the way down. We will change that entire script if we break our own Globex high, which would also be the RTH high of Friday. And if we do that, then we'll aim for Friday's high. Then we'll aim for the previous week's high, which they're not very far apart. And then for the ADR half at 45.52. So you can see what we've done here on the weekly chart over the last 3 weeks. That's been a phenomenal run from 41.50 to 45.50 in 3 weeks. Now, I was hearing a lot of people say we're overbought, we moved too far, we're due a pullback. And sure, there's a little bit of truth to that, but the markets can stay irrational longer than you can stay solvent. It's not my phrase. Hopefully this isn't the first time you've heard it either. So we might be a little bit overbought. We might be a little bit overextended, but that doesn't mean that we can't rally again today, this week, this short week. Keep in mind. All right, we talked about the volume profile moving up to where we are if we maintained that range through Friday. And hey, look at that. The point of control is moved up to where we are because we maintained that range from Friday. We also now have the point of control from the TPO, so we've spent more time in the last 10 days at this level than we have anywhere else in the last 10 days, which isn't much of a surprise. We've been here since Tuesday afternoon, like a hamster on the wheel running in a circle, but really not getting anywhere. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. Just keep in mind that the lows you see might not be the lows that we get to, right? Because every single day, a snapshot in time. If we maintain this high until Wednesday, all of this price action down here from Wednesday back, say about that much of it, all of this will be gone. By the end of the week, by Friday at the end of the day, this will be the new low in the volume profile. So all price would have to do is come down to that point. And by next Monday, we would come in and we would see price here at that low. And we'd say, look, we're at the lows of the profile, but it wasn't the lows of the profile at the time. Just like this high wasn't the high of the profile when we got there. It's just the high now. And it looks like we ran up, we hit the high and we bounced off of it. But that's not what happened. I bring all this up because when you're using this 10-day, 30-minute volume profile, you can't read in the past at what price did at these levels and consider that we bounced off of this low down here and rallied, or that we bounced off of this resistance here and haven't been able to make it through there. The best way that I can teach you to get familiar with this concept is every day at the same time, take a picture. Say today at 7 o'clock, tomorrow at 7 o'clock. You do that for a month. Flip back through a month worth of those snapshots and you'll see what I'm talking about. And then once you get it, you get it. You don't ever have to do that again. The VPOC from Thursday still stands. We didn't hit it Friday, so it's still there. It's about 45.12. It's the cog line, 45.11, same area. We don't have one to carry forward from Friday because we did hit it already, but I'm not going to carry it forward as a POC or as a V POC. I'm just going to carry it forward as a POC. The difference being it as a POC, it's just a point of control. Point of control, if you were to study volume profile, they'll tell you take the value area high, the value area low, and the point of control and shoot them from yesterday into today. I don't normally do that because I've already got enough pivot points. I don't need another one. So I only keep track of the V POC, the virgin point of control, the point of control that has not yet been hit. Generally, that's the only one I care to focus on. But look at where today's Globex low is. And that is a pivot point that I generally focus on. Globex low, Globex high, yesterday's low, Globex open. These are open, high, low, close pivot points, and I focus on those. This POC from Friday lines up perfectly with our Globex low. So I'm going to keep it on there just to remind myself that it isn't just the Globex low that we're focused on today. It's actually a point of control and the Globex low that we're focused on today. We are 2.6% above the 10-week moving average, and we're on our way down. So sure, we expanded considerably away from that 10-week moving average, but we're already moving back towards the 10. And just in the last 2 years, we've been 4% away, 5% away from that 10-week moving average. So just because we're 2.6% away, sure, we're a little overbought. Absolutely. But not overbought enough that we think there's some mean reversion on the table. It doesn't owe us that yet. We're not that overextended. Not like last year, for an example, when we were rallying up into that 200-day moving average and things were just getting a little bit out of control with how fast we had made that move up. Not like that AI craze earlier in the year with Junior Tech and the AI explosion with the NVIDIA, moving 200 points or 200%, excuse me, 200 points. Not like that when we were so far away from that 10-week moving average. So sure, we're a little overextended, but perspective, right? Looking at things on the weekly, we're not that overbought. But we don't live on the weekly, right? So we need to see other points of view. We're 1.35% away from the 10-day moving average. And this kind of puts it into perspective as well. We're on our way down. We're on the decline. Imagine these as waves, as choppy and disjointed as they look. We are on our way down. We were more than 2.8% away from the 10-day moving average. Now we're 1.3% away. So we're not very far from that 10-day moving average at all, which goes into the flavor of we're not really overbought. We're not really overextended. Not as much as it seems, because we spent 4 days doing nothing. It's just sitting up here digesting that move, giving the moving averages time to catch up with us. We now have a fantastic example of IX10. So inside day is when we are inside of yesterday's range. That's an inside day. So here we had a really big day, and the next day we were inside of it. So what? That's not what we want. We don't care, right? That's worthless. Who cares? But when you've got a very small day, and then we spend 2 or 3 days inside of it, that becomes really relevant, because this is just like nature building up energy. And what we learned about nature and building up energy is you got to let energy out, even just a little bit at a time, or you'll explode. So when we get price in a very tight range just for one day, it's still just an inside day. But when you get price inside of a really tight range for more than 2 days, it's called IX10. So we are in a TTM squeeze. We're in an IX10. We are in a compressed range. It's a topping pattern. You put it in whatever language you want. The takeaway is that when we leave this range, and we will leave the range sooner or later, it's not a maybe. It's a guarantee. We will leave this range. It's very likely that we leave the range with an explosive move. Now, there's no directional bias to this. It's not telling you that we're going to go up or down. It's just telling you that when we leave this range, it's very likely going to make a big move. How big? Measure the last time we had a range and we made a really big move. 4.5% in 3 days, 4 days. Really, it's 3 days and just a little bit extra, right? The overnight of the next day. 4% in 3 days. Now you do get little signals, like even with this one down here, it did start to broaden out a little bit at a time. That's the megaphone pattern. You can find that megaphone often in reverse. Either way, we're going to leave this zone, and it's very likely going to be a phenomenal move when we get it. So if you look at what we have and you decide that it's not really what you want to trade, you keep your powder dry, keep your mental capital ready, so that when we do get a breakout of that zone, you're fresh and ready to go. And ready to take advantage of it. Put some numbers on it. 45.41 to the upside, 45.01 to the downside. That's a really tight 40-point range that we've been sitting in for 3 days, starting on day number 4 now. Remember the average daily range for the S&P right now. 1.15%. 52 points is the average daily range right now. That's those red lines, by the way. Open and go in a single direction, 1.5%, we would get to the yellow lines. Volume is normal this morning. We're sitting at around 92. Nothing to see there. It's easy to just forget it and overlook it because of how often that there's just nothing there. In the last 5 days, solar has gone up almost 9.5%. Regional banks, 9%. Metals and mining, more than 6.5%. Airlines, semiconductors, 4%. Uranium, 3.5%. So it's not a perfect rising tide, but we're getting a heck of a lift all over the place, just not in the indexes, right? We just looked at the S&P staying in a 40-point range over the last 4 days, 3 days. And yet we're looking at these things that's moved 9%, 6%, 5%. So, you know, if you're looking around today and you're normally an S&P trader and you're thinking, gosh, another day of this sideways trash, dude, there's plenty of other stuff moving. Use your Apex account, right? And look at all the other things that you can trade with your Apex account, because you can trade a lot more than just the ES and the NASDAQ. Now, to be fair, the FANGs have moved 2.5% over the last 5 days. So this morning we got nat gas down 0.5% and bonds down 0.5%. Gold too. So we don't have gold, silver, precious metals. We don't have bonds. When we chart that, we can see the Dixie's down below that 104. In fact, we're really close to 103.5. So just level by level, that nice weak dollar is fantastic. But for a long time over the last 18 months, we would see the 10-year and the dollar working step by step together. And that's absolutely not what we have. So we've got the 10-year pushing against 4.47. It's up near the high of Friday. It's trying to break out yet again, holding above its VWAP. So we got a bullish 10-year, a bearish Dixie. Bonds under the VWAP, trying to break into new lows of the day, which makes sense because the bonds are going to move opposite of the 10-year. US dollar Japan down, which makes sense because US dollar is the first part, right? Dixie's down. So we're going to see this thing go down. Here's the rub though. If US dollar Japan is going down, gold, silver, precious metals should be going up. They're not. So something is wrong. One of those two is lying, and we need to be ready for that to change up. ES is a little weaker than the NASDAQ this morning. NASDAQ's still on top of its VWAP. The S&P is underneath it. So the FANGs are holding up just a little bit better than the financials are. Not by much. Microsoft's giving a lot of it back. It was up earlier because of that news. Made it all the way up to 380 after closing at 369.85 on Friday. Call it 370 just for some easy math. So we closed at 370, ran all the way to 380, and now it's all the way back down this morning at 373. So sure, it's still up on the day, but not as much as it was. And the sentiment is that all of this focus on AI with Microsoft is actually detrimental to Google. So we've seen Google kind of sell off a little bit on that news. Still holding above that key level at 134, but you can see the pullback, which sets us up for a really nice TRB play here. A TRB would owe us back up to that 137. Amazon still holding underneath the 50% mark. NVIDIA above that 50% mark. Netflix still continuing with this curl, much like Tesla did, right? Just smaller candles. Might want to keep your eye on Netflix. If we retest this 462.76, it'd be like a 10 MA bounce. We could find support there. Think of it as a run up, a pullback, and then a continued run up. Now, we don't have the continued move up, right? Not yet. We're just thinking ahead. That would be an LRE, really nice entry off of a pullback. Everybody always says they don't like to buy breakouts because they don't want to chase. They want to buy it on a pullback. Well, there's your pullback. The problem with this is just like what we had with PayPal. Nice move up, pullback, but then it just stalled here. So with NVIDIA, with Netflix, you know, this is kind of the fear, right? Because you buy a call and then we don't go anywhere. That call's going to lose, not because we fell, but because we didn't rise. Sure, you can maybe do a put credit spread at the money, or you know, you can do a call debit spread. That way you can kind of hold on through the theta burn. But that's still the issue. With PayPal, we've got a relatively tight range. That IX10 is just a little wider than I would like, but it's there. All these wicks showing that the buyers are defending this low. One of two things is going to happen. Those buyers are going to buy what they need, and then they're not going to buy anymore. Or they'll get smart and quit buying it there and let price fall lower and buy it cheaper. Either way, persistence beats resistance. So if we keep hitting this low, sooner or later, we're going to break that low. I've heard people say it's the count, right? Oh, well, if we hit it 3 times, then every time we hit it, it's a stronger and stronger level. There's two sides to that story. If we do consider that low a crowd of people, for an example, right? You're trying to get, you know, through the Black Friday sales event, you got all these people in front of you. Well, if that's the analogy, then every time we get down to that low, there's more and more people getting wiped off the board. There's more and more people that are no longer in your way. So what happens? Well, at some point the way is clear and then you can pass on through. Something to keep in mind when you think about the pivots that we mark, right? And why we're marking them. So this low, it really needs to hold at this point. If it does fail, we'll aim for 50% of this last bar. That'll be our first target to the downside. 55, 50. And then, of course, if we break that, we'll aim for the low, 54. If that doesn't hold, right? If it does hold, then we're going to start a new surge program. We'll get through the 3, then we'll get through the 10, and we'll see the 3 get through the 10. And we'll focus on 50% of this candle, and then 100%, and then on up through. LRE, though, you couldn't get it any cheaper or with less risk than right now. I thought it was today. Maybe I scrolled far enough away that that it was tomorrow. Nope, that's Monday. That's today. Tuesday, we've got the 5-year in the Europe, and we got the 10-year at 1 o'clock tomorrow. Yep. So we got a TRB in Apple and in Google. We got Amazon pressing against that 50%, looking for a break above. The rest of them are kind of iffy. You know, Netflix, sure, we just covered that. It has a bullish setup, but so far it doesn't have the flows, right? It's down from where it closed Friday. So we just need to see that follow through. These are my scans on the bull bear side of things. And as you can see, things are much more bullish than bearish. But this is a sentiment scan. So, it's not like we're looking at the indexes and gauging any sort of measurement of what's up versus what's down. That would take us back to here. And one of the things that are leading this morning up 2% is Bitcoin. And then the China ADR is behind that. So if I was looking for day trading opportunities today in something other than the indexes, then I'd be looking at Bitcoin products, HUT, Hive, Mara, Coin, MSTR, Riot, and or the China ADRs, JD, Baba, Baidu, maybe Neo or Li Auto. They're ADRs, but they tend to move with the EVs more than just the China group. We've also got some energy, whether it's energy exploration or just straight out XLE. Kind of makes sense. You get a falling dollar, got a rising energy. Cool, cool. So at least we have something to focus on. Yeah, Mara's up 2.8, Riot up 2, Coin, MSTR more than 1.5, NVIDIA 0.75%, AMD not enough yet. AMD, Square, PayPal, TSM, they're kind of lagging at this point. Schlumberger has a really nice daily chart. Good clean setup, breaking outside of yesterday's high. It's got a good start. If we're going to start to see energy turn around, I mean, there's a lot of work to do. It might be a little bold to go after something like Chevron or Occidental Petroleum just yet, but there's still just the ETFs themselves, and of course you could always just focus on something like crude. And for a day trade, it wouldn't matter, right? It's just a day trade is a day trade. Crude looks fantastic. And for those China ADRs, XPEV, which kind of fits into the EV plays, XPEV's up more than 4.25. NEO more than 3.5. Futu, Billy, PDD, JD, and they're not overextended yet. I kind of like that, right? I don't really want to focus something that's already up 2.5, 3%. These are some gappy buggers though. So of course that's a bit of a concern. But you know, for a day trade, we just get the setup, get it, and get out again. Yeah, so I don't like that big old gap up like that. If we can get through 18 though, we can start working on 20 and then 22 and then 24. Obviously not in a single day. We'd be talking about a swing at that point, but there's some bottom fishing stuff. Either way, we got a pretty good start to the day. The small caps have come in a little bit. They were down nearly 0.5%. They've taken half of that off. So, you know, they're starting to turn around a little bit. And we've got plenty of things to trade between Bitcoin, the EVs, the China ADRs, energy, plenty of things out there this morning to hit up on. Even the FANGs are starting to get a little bit of movement, but they're all primed for a bullish move, but they're not bullish. We're not seeing bullish flows yet. So kind of keep that in mind, right? They all have a really nice bullish setup, whether it's a TRB or a continuation breakout. They're primed for a great move, but they're not making the move. They're not getting the flows yet. This might be another day where the indexes really don't give us much, and then we don't get anything out of the FANGs, but we start to see other stuff like jets and pot stocks and, you know, EV plays and things like that. Everybody be careful, be safe, watch the clock. I'll see y'all tomorrow.